The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. Glad to have you back. Hope you had a great weekend. So let's check out where the markets are at this lunchtime wrap-up here. We got the S&P is down just half a point after all the massive movements last week. We got the Russell down 3.5 right there. We got the NASDAQ up 2.5 points, and the Dow is down 24. A little bit of mixed minor movement on the indices. Looking on over at copper. Copper's up about 1% right now. Gold pretty quiet, up only a couple points after some massive moves last week. We got silver right now is down about 0.15%. Not a big move at all. Natural gas down 1.5%. Usual big moves right there. We got oil is currently down 77 cents ticks right there on the day. We got corn is down 1.6%. Nice move on corn. Soybeans is up about 3.75. Looking on over at the currencies, we got euro dollar is flat, unchanged on the day compared to previous day's settlement. Aussie dollar right now up 30 pips. A pound dollar up a mere 3. Looking on over at the dollar, franc, it is down 6 pips. The dollar CAD is down 26. Dollar yen's down 15. The Aussie yen up 9. Euro yen down 28. Pound yen down 30. And euro pound is currently up 1 pip on the day. Okay, so I want to go over a couple interesting things on the Nadex platform, a couple of just valuable lessons for you to learn that sort of are unique to this week, and they have to do with they're not unique as in they only happen this week. It's just they're happening right now, and so just like I said, a couple important lessons regarding rollover, how rollover works, and what you can do to be ahead when that happens, so you're not like confused, behind, wondering what's going on, why is nothing quoting. And so let me show you. Let's see here and pull this up. And there we go. Okay. So if you log in over on the Nadex platform, what you're going to notice on a couple contracts. So let me see if I can do this again. Hold on a second. I'm going to log out and log back in. Okay, if we go over here, as soon as you log in, you're going to get this little welcome message. It's like, hey, update. Natural gas and future symbols are going to be rolling over. They went ahead and did an early update there on June 23rd to the natural gas contract. And inside the scanner, I help you out with what does this whole rollover thing mean and everything else. And I actually put up the rollovers for you inside market right here. So you'll see like natural gas. If you highlight over that, again, inside the scanner under Nadex information, Nadex calendar, you can put your cursor over it. It'll tell you what the symbol is going to be. NGQ4, NG08-14. It also shows that copper and silver are rolling over on Friday. Usually they roll over on Saturday. So a couple tips for you. One is a rollover on a day means that it actually rolled over at 6 o'clock p.m. Eastern Time the previous day. So it's applying to that day's daily expirations going forward. So if we rolled over on Friday, really at 6 p.m., all of the contracts that are expiring on Friday on the 27th at 6, or 5 or 4 or 3 or 130 or 125 or 1, like in this case, 1 and 125 for copper and silver, are going to be using the September contract. But there's something else that's unique. The weeklies are going to be on September, but the current month is going to be over here, and it'll tell you this, will currently be based on, I want to say, what is it, June, July right now? So I'll pull those up for you. But notice it does tell you, now the demo doesn't seem to pop up the message. I don't know why. At least not for me lately. But on the live, it'll say, hey, natural gas has rolled over. What does that mean? That means you need to open up, okay, open up your platform, whatever it is, Thinkorswim, NinjaTrader, TradeStation, whatever it is that you use, and put in the current months. So, like I have, natural gas right here. I got natural gas 0714. What does it say I should be on? It says you should be on August of 2014 for natural gas. So I'm going to go in here and I'm going to change that. And I'm going to update this to NG 0814. So that way now I have the August natural gas contract showing. Okay? Now it also says something that's really unique. It says that copper is going to be using September. So let's look at copper. I got September, but currently it's on July. Okay, what are you talking about? So I got July and September both on my analyzer here, and I use what I call clarity priced, so I can keep track of what the indicative actually should be. But let's go over here and let's look at copper or silver. Doesn't really matter which one. And I guess we're going to have to do silver because we need those dailies. And right here, let me open up, I'll just open up this ticket. And then I'm going to open up, like say, this ticket. Put these side by side, so you can see this right before they close down. Notice how my silver contract is currently on July for my daily, the one that expires today, June 23rd. But the one that expires Friday, the weekly contract, is using September. Okay? Why? Why do I have two different expiration months in the same week? The reason is because you can't change. It's a contract. Okay, contract terms aren't supposed to change. Okay, so this contract is saying that the silver September future, the September future contract will expire greater than 20.75 at 1:25 p.m. on Friday, June 27, 2014. The liquidity is going to be dropping off of silver this week. And especially on Friday, it'll just be abysmal. Okay? So when that happens, it would not really be a fair market to make the Friday expiration based on the July contract because there wouldn't be enough volume to get a fair indicative price where they go in their settlement price, where they take those last 25 trades, they average the middle 15. So since the volume is going to go so low, they roll it to the higher volume month, and they start that at 6 o'clock on Thursday for the dailies and intradays, okay, going into Friday. But they got to start it at the beginning of the week because they can't have you like on the July contract all week saying, hey, on the July silver contract as of, Friday, we're going to, you're going to buy a contract saying it'll be greater than 20.75, but then change it to the September future for the indicative on Friday. You can't have July and then September middle of the week and then it's changed on you. And they know that. So they're going to put the dailies and intradays on July until we get to those Friday expirations. Then they're going to roll on over to September. And since weekly's already on the Friday expiration, it's going to start on September. So you just want to make sure you're paying attention, especially on those ones that roll in the middle of the week. And we make that really easy for you by keeping it up to date, again, right here inside one of the many benefits of the spread scanner, where we keep you up to date on those rollovers. So just in case you didn't get it, I'm going to say it one more time. I know a lot of you are newer on futures. The market comes in, you start trading, you buy a Friday expiration contract for the July silver future, but then there's no liquidity on Friday, so like trying to get last 25 trades, way too easy to manipulate. Okay? So if they leave it there, you're going to get hosed on your settlement. If they change it in the middle of the week, well, you bought a July, you were up, but all of a sudden September has a completely different price. And then they change it on you middle of the week. That would not be fair. So that's why they space it out like that. And, the price can be really similar. We go over here, we look at, but let's look at the last price. We got 925 and 975, see, on the July and the September. Well, that may be the difference between you being profitable and losing, that small difference. So that's why it's important that they do that. It's good that they're doing that. I'm glad that they're really hopping in, starting to do that middle of week changeover, rollover to match the contract. That means they're just, further and further fine-tuning and refining those contracts, making sure those expirations and settlements are basically in the best way possible for you. But anyways, you just need to make sure you understand that, why that's there, why it exists, and that you're always looking at the right contract. Remember, when you're on an ADEX, when you're on the scanner, either one, whenever you open a contract, it's going to have the name of the month right in it for you. So if I click on this contract over here, it's going to pop it up and tell me, like, hey, we're looking at the September contract. But another thing I want you to notice, there's no indicative showing. Okay, so just be aware of that, and that's the reason why you need underlying markets and charts. And so, submit it in the help desk over on the scanner. Be glad to help you out there if you want to know how to get access to that, if you don't already know. But I use a couple different brokers, and I use NinjaTrader as my main platform to get those data feeds in there. And there's ways to do it where it didn't cost you anything. So if you want to know how to do that as well, just to submit that inside the scanner help desk there, be glad to help you out. Now, another thing, every once in a while it just doesn't feed. So let's say you're doing natural gas, and they had it, I don't know why they said they just made it roll over just now, but since they just now made it roll over for some stupid reason, the indicative's not showing. My assumption is that thing will actually start showing at 6 o'clock. But again, you should be looking at a real underlying market anyway. This is just one more reason. Again, you're not going to be getting a feed. If we go over here to the underlying indicative, let's see what happens. And let's look at their commodities. And let's look at the indicative indices. And notice how there's no quote. Therefore, that chart's not going to look real helpful, right? It's going to be missing all the data. So, also, they can't give you the volumes. This is like from last week right here, I bet. Let's see, what do we got? We got the 20th. Yeah, so there's no data even feeding in all day today. So if you're relying upon these charts, then you're out of luck. They're great in a pinch. They've done a lot of upgrades to them. It's awesome. But you need real charts of underlying markets with volume on them. And if you're using like our stop trigger, obviously you can't use that if there's no feed right there. Working on a solution for that, but make sure you're aware of that. And but there are some other things you can do, and the main thing is just actually look at the market. So hopefully that helps you out in understanding that rollover. Why do contracts roll over? Well, they are a contract. A future contract is a contract where you're saying, I will, now this is a future contract, so let's say we go around to CME. And let's say we'll go to gold. All right, everybody likes shiny gold. Like it more if the menu would work. Oh my gosh. Let's refresh the page. There we go. Okay. Metals. And so we'll go look at gold. And let's say you want to buy gold. When you do a future contract, what you're actually stating, at least on commodities right here, is you're saying, I will buy this. We'll come back, I'll finish that statement right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, come on back here to the Diagnostic Trading Hour. And, okay, so just going over, what a futures contract is. A futures contract is where you're saying, I will buy this, say, commodity, such as gold. A commodity is a fancy word for something that if you drop it and it lands on your foot, it will hurt. Gold, oil, silver, bushel of corn, things like that. So, oil being a barrel of oil. And let's see. So, on gold, I'll buy this many bars from you. Well, how many? Okay, because it's a contract. 100 troy ounces from you. So I'll buy 100 troy ounces of gold from you by this date. And so there'll be some specific dates laid out where there's trading settlement, there's last trade date, there's actually a delivery date where the bars have to be delivered. Okay? There'll be delivery methods, there'll be what grade they have to be, all this stuff. There'll be an inspector there that's inspecting it. As far as gold, it actually stays at the vault there. You can pull it out if you want to, but if you have to put it back in, it has to be all melted back down because they have to retest the purity of the gold. Cattle, like if there's an agreement for where it's going to happen at, then you go to that train station, there's an inspector there. You look at it and make sure the grade of the cattle. If there's any cattle that are not up to par, they get thrown out. The price gets discounted, passed on to the buyer of the cattle. So it's actually used for a real purpose, okay? And then for the the seller, they're saying, I will deliver the gold, or I'll deliver the cows, or I'll deliver the hogs, or whatever it is, by this date, at this price, at this level of quality. And companies use this. Kellogg uses this to buy the corn for their cornflakes. McDonald's uses this to buy. Is how they how can they price out what hamburgers are going to be in 6 months? How can a cereal company price out what they're going to charge, a grocery store in 6 months. They're making all this quantity. They're putting it together. They're making it. They're delivering it. They got to come up with price sheets, everything else. How can they do that? They got to know what their costs are. They got to hedge their cost off. They use the futures market to do that. Farmers need to make sure they can lock in a price. Yeah, corn could keep going up, but they've covered their cost of, raising the corn and everything else, and it's went up, and they're at a profit now. They could sell that off, okay, with the ability to, hedge it. If they sell it, it drops down. They could always buy the contract back if they wanted to. Of course, now they still have the corn, so they may want to just go ahead and get rid of it. But there's a lot of ways that they can be used. Options can be used on them. There's a lot of things that can be done. And one of the types of options is the Nadex options, the spreads and the binaries. So if you're trading, a spread or binary on it, that means the price is going to be based on that contract. Like the gold, in this case, what are we on? Like the gold August contract. So the price will be different by date. Why is the price different? Why isn't gold the same on August as it is on September, December, whatever, right? Well, there's a few different reasons. There's storage. So, you actually, like if you got cows, right, you got to feed them. You can't just buy the cow and not feed it because you sold the thing off. You got to feed it to get it to delivery. Oil, you got to put that in, the oil wells, barrels, you got to, store that. You have natural gas, has to be put into the thermal units, be kept basically frozen. You have the silos where the corn's being stored, the vaults where the gold is. You have the interest rate value potentially of something like gold or interest rate products. So there's different reasons for an actual value of it just sitting there. So there may be an expense or there may be income from it. And so the more time there is, like if you hold on the cows for 3 months versus 6 months, that's 3 more months of feed that's got to be built into the cost of the live cattle going further out. Now, sometimes that can get inverted. Things happen. Swine flu happens. All of a sudden there's no demand on the front month and all demand's on the back month or vice versa or whatever. Weird things can throw things out of whack. But it's just important to understand that there is a reason. There's a cost of storage or there's an interest rate, cost to carry, FX, things like that will be put in there. So if you know what carry or swap interest is on FX, like if you're long, say the Aussie that's at, I don't know what it's at right now, but let's just say it's at 2%, and let's say the U.S. is at 0.25. Well, if you own the Aussie dollar, then, you're collecting interest. If you're short the Aussie dollar, which means you borrowed Aussies and you're, loaning dollars, then you're negative interest. So you're losing 1.5% or a little bit more than that a month or making it, depending on which side you're on. Well, that interest is built into the cost of the actual FX pair. So that's why if you look at an FX pair side by side compared to a future of that same one, let's go over, let's check it out. Let's pull up, let's look at Aussie USD, and let's look at 6AZ4. And you'll see that there is 0.9316, 0.9418, because all of the carry interest is built in to that December future contract on the Aussie dollar. So that's why the prices are different. So we'll talk about what this means about Nadex when we get back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour, and let's check out where we are right now. Okay, so we're looking at going to the Aussie dollar. We're going into Aussie dollar futures. We're just comparing, why the prices are different. They carry interest rate, and we can even look at that. That's the spot and the future. If we just go and look at the future, and we can see the various prices as well. Built. We got M4. We're going into, what is it, H4 now? It's H4. I'm backwards on that. And so you can look at each one of them, and you can basically see what the price difference is and know which contract Nadex is based on. And I don't know why I'm forgetting those, but all those fun symbols, I think they made it like, where did the U come from for September, right? But they go in, they make the different symbols, they put them all together, and let's see here if it doesn't seem to be pulling up the most active. It should be. Let me see here. U4. Yep, that's right. Just really, really spotty. We'll break it down to minutes. That'll make it look a little better. There we go. Oh, that's why, because that's how it's set up. All right. Doesn't have the overnight session built in. But we can even see that there is 93.61 to 93.16. So we can even see that interest rate being built in there, of it being taken out. Like if you go and you buy the Aussie dollar, then you're get like that interest is built in, and it'll go down, 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 down as it goes forward. It won't really affect you in your normal trading, unless you don't understand it. Then it could have an impact on you. But it's not like some massive drop. It's a very calculated interest rate, but that's built in between the September and the December future itself. So that contract date does exist for a reason. It does include different pricing. It is important you look at the right contract. And as you noticed, again, if we put all three of them up here, if we put, say, the September, the December, and we put the actual spot, all of them are going to have a little bit different pricing, okay? And so it's very important that you look at, the right contract. On Nadex, FX is pretty easy. You just look at the spot market. You don't have to worry about the futures market. So it's a contract on Nadex, but it's based on just the spot rate, the Reuters data feed spot rate, okay? But on the futures markets, it's very important. As you can see, they can definitely be different. Even on the futures versus spot, they can definitely be different. You don't want to be looking at the SPDR ETF, for the S&P 500. You don't want to be looking at the SPX index for the S&P 500. You don't want to be looking at some S&P CFD for the S&P 500. You'll be looking at the ES contract and the correct month, which is currently U409-14, not the December contract, not the June contract. Make sure you're looking at the right contract. And it all comes back to where we started at, is looking at these contracts right here, where it was based on July for, today, that just expired out at 125. This one was based on September. So if you're trading today's silver contract that's expiring today, then you'd have been looking at July. Tomorrow you'll be looking at July. Wednesday you'll be looking at July. Thursday you'll be looking at July. But Thursday at 6 o'clock, when it rolls on over to September, we're going to be looking at the September futures contract. And that ought to get you caught up on that concept right there. Just trying to make sure everybody, again, is on the same page, understands what they should be looking at. It can sound really complex, but it's really simple. Just look at the date in the name of the contract. It's that simple. If you're not sure, you can go over here and, again, just look at the date in the name. But if you want to get a list of what the current underlying markets are, just right there. They're all listed for you. Okay? And these will update, I believe, at midnight. So I may see if I can get my programmer to make that update at 6 o'clock. So that would be, a helpful thing to have that automatically update at 6 p.m. Eastern time the day before. Let's see here. All right. So I put a little note on the side. Now let's check out where we're at on this week's news reports. So today is June 23rd. We had the existing home sales report come out, and on that report we were looking at a iron condor on the euro dollar and looking at 3 p.m. expiration. Really not expecting a lot of movement on the euro dollar at all today. And let's see how those expectations worked out. Where are we at right now on them? And let me just open up a new quick chart for you on the euro. Got a lot of different charts, but I just want to get a clean one. Throw some minutes on there. Okay. All right, so looking over here, checking this out. Zoom in a little tighter. And we add on a little shortcut for the toolbar because that's always helpful. And the plan was to get in no later than about 9:45. So pretty much enter at 9:45. Okay. So let's take that 9:45 price. Let's see where we're at right now. It has moved up a little bit. We're about 14 ticks on the day. And our expectation was really it shouldn't move more than 30. So far, we're on track for that. And we'll see if that continues. So it's moving on up. And I'll probably be scalping that close one out pretty quick here. But anyway, so moving up right here and sort of stalling at the moment. But we're on track for that plan. Let's go ahead and see what else we have coming up for the rest of the week. So pretty quiet week right there. And let me see what we got. We'll go over here to Forex Factory. It's one of many news websites where you can easily find the different reports that are coming out. All right. I just got to log all these down so that way I have them for you going forward. All right. That's it for today. So that quite of a day. Let's check out if we got what we got going on for tomorrow. And what do we have here? So we're going to have, just a recap of what is on the list. We got trade balance, German IFO, business climate, inflation report hearings, BBA mortgage approvals, and not really much going on there. I guess we got new home sales. So let me see if I can pull up any good stats on new home sales for us, see if that might be a tradable one based on the last report. Let's see, what did we have here? We had May 23rd was the last time we were in on new home sales. And I want to see how that one went for us. Okay. New home sales. All right. We do an iron condor on the euro dollar. We do a 7 a.m. to 3 p.m. expiration. Or you can do a 9 to 11. You can do it either at 7 for 3 or enter at 9 for 11. In either case, the minimum profit is $30 or more. Okay, so in either case, the minimum profit would be $30 or more. All right, let's see here. And trying to see what else. It's just really a quiet news week. Makes for a quieter show. But I'm going to double check that was the plan we used last time. I'm double checking it to make sure it's still valid. I always redo my plan. So no matter what I have, I'm always going to go back and go, hey, does that still look valid? Did it work last time? Last time it worked perfectly. It moved like 2 pips by the 11 o'clock expiration. It moved like 8 pips by the 3 o'clock expiration. So it was a great trade. Let's go ahead and move on forward to the next day because I can't see anything else. All right, we'll hop on to Tuesday. Tuesday, we got a few things. We got, that's new home sales. Yeah, new home sales, same report. That's what I meant. New home sales at 10 a.m. So we got the 10 a.m. new home sales done. At the same time, we're going to have consumer confidence happening. I'm not really going to factor that in as being anything different, so I'd stick with the same plan on consumer confidence. We usually don't have any kind of upset on that report, and so that should not really impact us that much. So consumer confidence, new home sales, 30 pips, looking over the history. Yeah, they all look really good. Double checking the 3 o'clock plan along with the 11 o'clock plan, 10 o'clock plan. 11, yeah, comes out at 10, so 11 o'clock plan. Yep. So the 11 a.m. plan and the 3 p.m. plan, entering at 7 for 3, entering at 10 for 9. Let's see here. 9 for 11, 7 for 3, and might be able to make, I think we can keep them at 30. We had them higher last time at like 35 and 40, so I'm trying to see if that's even needed. And really, based on everything I see, that's not even going to help us. It's going to probably keep you out of the trade, and we're just going to help you. So on existing home sales, Iron Condor 7 to 3, $30 or more. Iron Condor 9 to 11, $30 or more. I doubt you're going to get the 9 to 11. You might, though. You never know what kind of the implied volatility might be. So you can be looking at the 9 to 11, but the 7 to 3 for $30 also looks solid. Last time it moved like $20. 20 pips on one of the reports right there. So we had a little combination of them. What about trade balance for the dollar franc? Is there anything we can do with that? We're going to have, 7 a.m. expirations you can play with. That report's going to come out at 2 a.m. And so I need to pull up stats for a 7 a.m. expiration, right? And that's right here, trade balance, dollar franc. Okay? And don't expect a lot out of it, but I just want to see, hey, at 7 we had 10 pips, 3 pips. We got about 45 on that one, but then it dropped back to about 35, 3 pips, 9, 8, 5, about 30, 6, 30, and 16. All right, so based on what we're seeing, I'd actually say 30 pips as a Iron Condor entering at 11 o'clock for the 7 p.m. tonight for the 7 a.m. expiration tomorrow for the dollar franc 2 a.m. trade balance report. Okay? So that gives you a trade balance report, it gives you a new home sales and consumer confidence report on Eurodollar. And that'll wrap up tomorrow for you. Get you good and going there. Let's see, what do we got for Wednesday? For Wednesday, we're going to have, let's see what we got. Durable good orders coming out. And GDP is coming out. All right, well, let's check out the easy, whatever GDP is, it's going to override. It's not, how do I put this? In the GDPs, there's like preliminary and there's all these different GDPs. So you got like preliminary release, advanced release, final release. The advanced release has the highest impact because it's the first one, and then you have the preliminary one, which is like medium impact, and you have the final, which is the bigger or the smallest impact, because we already have the numbers. They're just revising it. So let's look at this and see what we got. And a lot of times they're all grouped together, so that's why I want to make sure we're actually looking at final GDPs only. Yeah, a lot of these are averaged in. Okay, so let me look at the final ones. So that's a preliminary, advanced. Okay, final. And on the final GDP, like I said, not usually the biggest impact out of everything. Just trying to get you a good news plan to potentially trade that on. Final GDP, Eurodollar moved 6 pips by 11 o'clock, moved 14 pips by 4 o'clock. And let's see, the final one before that moved 26 pips. After it did have a little bit of a rocket ship, though. It ran up about 60 and pulled back down. Let's see, final before that about 17. Then we got like 38. Yeah, we'll see if we come out. I'm going to scan this a little bit more here in the break. See if we can put the plan on. There.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. the king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Diagnostic Trading Hour. And going through, looking at it, okay, so after analyzing the U.S. GDP coming at the same time as core durable good orders on Wednesday, there's no consistent impact. It may be 35, it may be 55, it may be 2, and it really is just random. It is the final GDP, not the advanced GDP. So we're going to go ahead and say a be aware trade, not a news trade, not a statistical news trade on those. So make sure you mark durable good orders and final GDP. Again, noting that advanced GDP is usually the highest impact one, followed by preliminary, and then minimal or random impact by final GDP. Let's see here. So coming up for the rest of the week, we may have personal income and outlays, jobless claims. We could be looking at that for Thursday here in the U.S. at 8:30. So definitely for those as a be aware, we'll update that for you later in the week. But so U.S. Be aware, personal income and outlays, and jobless claims at 8:30 could have a small impact on the market. Then 4:30, we're going to have GDP for the British pound. And let's go ahead and look at that, which GDP and all that fun stuff. Friday, it is also going to be the final GDP. So, we're going to have the same issue there of, the advanced and the preliminary and the final and putting all that stuff together. They release them as preliminary and then second estimate and final estimate. So their preliminary is our advanced, their second is our preliminary, and their final and our final, same type thing. So we're also going to stick that on the be aware. It's going to be a very quiet news week overall. I will try to see if I can come up with something for you by Thursday or Friday. We'll dig in and see if we can find anything there, possibly for the personal income and outlays, and possibly for the final GDP on the British pound. That might be more possible being a Friday. Just a lot of times, Fridays can be pretty quiet. So if the reports line up, we'll go for it. But if we see just some massive movements, we'll want to stay away. And I wanted to see if there's consistency on the reports. My guess is there's not going to be on final GDP. It's like sort of like the event didn't even happen. So it'll just be a random day without all the consistent impact that we want to see to use for a news impact report. All right, well, that catches you up there. Another thing I wanted to make sure, if you're not aware of, this has been going on for a couple weeks now, but Nadex has actually offered some tighter strikes over on their Aussie Yen contract. Let me show this to you. And right over here, I want to say they put it on the Aussie Yen. If we go to Forex, we go to binaries, we go to Aussie Yen, and they have tightened those strikes up to 5 ticks wide. So, which is awesome. That makes it a lot easier to find a strike to trade. Now, it also can make it more difficult in some ways because it can more easily move outside of the range. So, hopefully, they'll be expanding those ranges out pretty soon. But as long as there is a strike available in the range to trade, then you can hop in and get trades a lot easier because it'll more likely be closer to a strike, which means there will be premium either on the out of the money, where it's not like 10 ticks away, or on the in the money, where you're not only collecting, say, $5. And now we're getting really close to expiration. We got 2 minutes and 12 seconds, but let's go out like one more expiration there. See that? Popping on out to 3 o'clock. We're just have some time left on the clock. And notice how there is plenty. You got a couple out of the monies, you got a couple in the monies, you got a decent in the money. So by having those tighter strikes, they've added that one to the list, and we can do it. Looks like we got a quick call here. See if we can get it in before the show's up. We got Junior from Seattle. Hey, sorry, Junior, we're gonna have to catch up tomorrow. Came in right at the end there. But you have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.